Back to our discussion with Oliver Sloup at Blue Line Futures. Oliver, the question on everybody's mind, including me, the question on my mind, when are we going to break out of this 114 cash cattle trade that we've had for the last 6 weeks? And what does it take?
Well, it's been on the top of my mind as well because we've been pretty optimistic on live cattle, especially when we were continuing to work higher on the futures board. We thought that there would be a convergence between the cash and the board, but the cash just hasn't budged, and that's been putting a lot of pressure, obviously, on the futures board, most specifically April. And now we're kind of running against the shot clock in April, so the optimism there is starting to wane as a lot of the index funds have started rolling, or some have even completed rolling out of the April contract. So June is really going to be the month of interest here going forward. And I think once we do chew through some of these cattle, we'll continue to see that build on the board and I think start to work cash a little bit higher. And once we do get that, I think we'll be off to the races again. One of the big catalysts for us since the beginning of the year on being optimistic livestock has been fund flow. We've seen fund flow in commodities across the board. Livestock has really lagged, but I think, again, if we can get the cash to budge off of 114 and start to make progress upwards, I think we could invite some more fund flow and get us back to new contract highs for that June contract above 122.40.
Well, it's up 70 right now at 119.67, got as high as 119.80, August up 80, the October up 65, and finally, after working at it all day long, Oliver, we finally pulled April fats up to unchanged. Over in the feeders, though, it's April down 12, the May down 20, but Oliver, we've actually firmed those far-out contracts, so is this spread trading?
Yeah, I think that's quite a bit of it. The front month, April's been just range bound. If you look back, really since November, we've just been kind of stuck in the mud, and we're right in the middle of the range. So I don't think there's a whole lot to do there. As far as looking a little bit further out, we have been working with some clients out in the August contract up here at the top end of the range. Potentially we break out, but I do think it's prudent. If you got to lay off some risk up here near 155, that's not a bad spot to do so.
All right. Over in the hogs, can you imagine we would have triple-digit hogs, April up 272, the May up 250, and that July is at 99.42. It's at 99.65 for a high. All these contracts higher.
Pigs can fly, I tell you what. It's just one of those markets where it's just momentum on the back of ASF concerns, and it's just kind of feeding on itself. And I wouldn't be surprised to see that continue. I've had a lot of clients reach out to me asking if this is a good opportunity to short the market. And I got to remind them, tops and bottoms are a process, not necessarily a point. And if you've ever traded lean hogs, you know that this is not something that you want to step in front of just because we're in technically overbought territory. These things can often overshoot fair value, and I wouldn't be surprised to see that take place in lean hogs.
All right, Oliver, we'll talk to you tonight on the Real Evening News.